Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, August 4th, 2024. Hope you guys are having a fantastic weekend, and let's get started. So, this market has, it's been really trying to tread water, and it just seems like each bit of news that comes out, I've been saying that this market's been priced in for perfection, so something like this is due. I don't believe it's the start of a new bear market. Do I believe that we could head a lot lower than here? Absolutely. I still believe that we're going to be heading down towards that 5,100 or 5,000 level. But here, if we're just looking at, this is the rally that from the lows here to these highs, and you can see we're right at the 78% retracement level. This is where buyers stepped in, and from there, this is obviously what the bears need to break through. If they can break through these lows, then the 5190, 5200 is going to be a magnet right here. So if the bears can get through it, this is going to be support. Now, let's say this doesn't hold right here. What we need to do is now bring this back out further and go to our daily chart. And here you can see from the lows to the highs, 23% retracement is up. Hang on one second. Okay, here's the chart of the SPX. That was the spiders. So here you can see we have, we're right at some support. That's right around that 5250 level. If the bears get through it, then we're looking at a move coming down to the 5200, which is also right next to the 23% retracement. So I showed you on the 60-minute chart, right here, that we made it down to the 78% retracement from this low to this high. So again, if this does not hold, then what happens is we're going to be looking at a move coming somewhere into this. We could find support right at the 5070, which is the 200-day moving average. Now, if that doesn't hold, you can see this is actually good support right here, where if I just take this support line, put it here, you can see it's coming pretty close to the 38% retracement level. So if that happens, then we're really what would happen is that's where I'd be looking at for some type of low right here, or a really good bounce to hit. But we know that the typically we'll find buyers at the moving averages like we did the 50-day, and once that gives way, then we start looking at the 200-day. Now, we can also see, I'm just going to duplicate this and put it here, because this is other price support right here. So the bears are going to have to get it through this right around that 5,000 level to give a shot down for the 4830 level, which is the really core support. But really, the first line of defense here is going to be pretty close to the lows that we made. But you can see that we have the 23% retracement that's at the 5160 level. So this is really what I would be eyeing down somewhere in this level. That is if they open lower. Now let's go to the scenario if they open higher. What should we look for? So let me zoom in a little bit here, and I'm going to go to a 15-minute chart, because here you can see the RSI is moving up right here. You can see the Arun that's been on a sell signal really since right around here and has not budged. It's getting into the very, very over where we typically have seen reversals and spikes to the upside. So we don't have it right now. We're on a sell signal. With the S&P 500, we had bearish divergences in place, and with bearish divergences we are here, but we don't really have any bullish divergences as we made these lows. So a pop up, I'm anticipating that there's going to be sellers waiting right around that 53.87 level. If the bears can if the bulls can get above it, we have this open gap right here. That's at the 54.25, and then we have the moving average at the 54.50. So this is going to be your resistance zone right here. And again, if the bulls can get it above this 53.85, then you anticipate the gap getting filled. That's at the 54.50, and then possibly a test of the 200-day moving average on the 15-minute charts. That's at the 54.50. So really, that's about it. There's, you can see that we don't really, we don't have any bullish divergences here, but we are pretty oversold. If we look at the hourly chart, this just kind of went on to a sell signal here, where we can see. Let me just move this here. I'm sorry. Hang on one second. Okay, so here you can see, as the low was being made, we have the low on the price oscillator. So we don't have any bullish divergences. And again, we just went on to a sell signal on the rune on 8-2. So this is, until we can see the bears start moving our trend indicator into a buy position, and we see the Arun crossover. Right now, the bears are in control, but I'm anticipating that we are going to get some kind of bounce, whether we have to come down first and then from down find support at the right around that 52.50 level or 51.50, where that will come into play, and that's where I believe we're going to get another bounce, and that bounce will probably get rejected somewhere up into the anywhere at the resistance levels. But let's just wait for the bounce before we start trying to figure out where it's going to go. But right now, it's pretty simple. If the bulls can get it above the 53.75 level, then you anticipate it's coming up to the 54.50, somewhere up into the 54, even 85. This would be a decent little bounce, and from there, I would expect that we would see lower lows and really a test of the, somewhere. I'm still believing it's going to be somewhere at the 51.60 or down to the 50.71, which is the moving average. So this is kind of my downside, target, and it could change. But right now we want to be pretty quick with everything, because we know that when it's not even a bear market, but when you're in a declining market like this, these these short squeezes can be pretty massive, and you could actually make a lot of money on them. But you just have to keep looking both ways at all times. So with that, let's see what plays out tomorrow. Enjoy the rest of your weekend, and I'll talk to you guys in the morning.